With the recent news that the US military captured Venezuela's dictator Maduro, there's going to be a lot of talk in the stock market about oil companies and oil stocks that do business with Venezuela. So we're going to be taking a look at a few of them and see if it would be a good investment to add to our portfolios. After that, Trump mentioned that the US oil companies will invest billions of dollars in Venezuela after Maduro's overthrow. So let's go ahead and take a look at those companies now. And we're going to see their intrinsic value to see what the true worth could be for these companies. Now, the first one we're going to be taking a look at is going to be Exxon Mobil. As you can see, it's already up 1.92% today. I'm recording this Monday the 5th at about 7:57 a.m. So before market open. This company currently has a market cap of 517 billion, a PE ratio of just 17 with a great dividend of 3.37. So let's go ahead and take a look at the intrinsic value and see how safe that dividend actually is. Now, this isn't the actual intrinsic value we're going to see, but this line here, this green line, is the average, the intrinsic value average throughout time that this stock could be worth. And then this little green line down here and the red one is when it's overvalued and the green is when it's undervalued. Now, if you followed the channel before, you know I like to buy companies that have divergence in price and their EPS. Currently, there is divergence on this company, but not what I like to see, okay? I like divergence, for example, here when the EPS are increasing but price is going down. This is usually a good telltale sign that the stock is going to go up afterwards. Of course, there's a lot of metrics that you have to look at after, not just this, but I don't like seeing this. I don't like the EPS going down and then the stock price going up. It just doesn't make sense to me that a company makes less and less money and then the stock price just goes up and up. Of course, there's other metrics. Revenue could keep going up. The profit margin could be going up. There's other things that make this company go up. But in my personal opinion and the way I like to invest, I like companies that increase their EPS and for some reason their price is dropping. Now, if we take a look at the overall financials of this company, we can see that Exxon Mobil is not doing all that great. Although you got to keep in mind that now this is a new opportunity, so all of this could change, or maybe nothing is even going to happen. We don't know yet. But the only positive here is that the revenue is up 1% to 339 billion. Everything else is pretty much in the red. Now, the free cash flow margin is just at 7%, which is usually not great. Although keep in mind, a lot of these energy companies, they don't have a lot of free cash because they do pay a lot of dividends and usually their payout ratio is very high. Seeing that it still has a positive free cash flow margin, I guess it's a positive, but we're going to take a look at the payout ratio in a second to see how that can affect the dividend. Now, looking at the rest of the metrics, again, and nothing here is really that great. Gross margin is at 30%, okay, but everything else is not even upwards of 15%. Again, I know it's energy companies, the numbers are not going to be great. This isn't a growth company. This is like a dividend aristocrat, if you so want to call it, but that's about it. If we take a look at some Wall Street analyst rating from this company, out of a 5 rating, it currently has a 3.77. This is a total of 27 analyst breakdowns with 8 strong buys, 5 buys, and 14 holds. Now, this is, again, it's not the intrinsic value we're going to take a look at. We're going to take a look at it in a second with the metric, but this is what the analysts are forecasting for the stock to be worth. A low end of 109, an average of 131, and a high of 158. Now, I'm sure this is going to update in the coming week with the recent news of the capture of Maduro, but we have to wait still and see. And if we go ahead and take a look at the dividend, we see that it has been growing the dividend for 27 years, which is amazing. The dividend growth rate here is 2.82. We saw before it was closer to 3, and the payout ratio is only 56.98. So it's a low payout ratio. They don't have a lot of free cash, but the payout ratio is not that high, and I apologize. This is the growth rate, the dividend yield this year, 3.36. So what you've all been waiting for on Exxon Mobil stock, as you can see, the intrinsic value on a base case scenario is still overvalued at 1%. The worst case scenario is that this company is overvalued at 34%, with it being worth about $80. And in the best case scenario, we currently have an undervaluation of 46%, meaning the stock is $228 or could be worth $228. So let's go ahead and look at the next stock. The next one is going to be Chevron Corporation. As you can see, pre-market is up 2.29%, about $3. It has a market cap of $313, a PE ratio a little bit higher than Exxon Mobil, which is 22, and a dividend yield a little bit higher as well of 4.39. Now, again, just like Exxon Mobil, we're going to do the exact same process. This isn't the exact intrinsic value, but this is the green line. As you can see, a lot of the time it's overvalued, undervalued, but it's very close to the line. So the stock tends to follow its intrinsic value very closely. Same thing for the EPS compared to the price. The EPS have been decreasing and the price of the stock has been increasing. Again, I know the EPS doesn't change much in this type of energy companies because they're just sort of stagnant in price. They don't really increase too much. It's nothing crazy, but I like divergence. I like EPS up and price down, and it has not been the case for this company or the other one. Now, taking a look at the overall financials, I mean, I think this one is worth an Exxon Mobil. Everything is pretty much in the red, with revenue just at 193 billion. Again, I know that the energy sector has been a little hard on investors, but I mean, if you want to invest, you want to invest in great companies that have great opportunities. And now coming up, it might be a good one, but again, we don't know. So let me know in the comments below if you think this is actually going to change anything. Now we can see that the free cash flow margin is a little bit higher, just at 8%, which is 1% higher than Exxon Mobil. And if we take a look at the overall efficiency of the company, gross margin a little bit higher as well at 39%. But I mean, everything else is pretty low. Again, free cash flow margin 8%, net margin only at 6%. They're still profitable, which is good, I guess. Now, if we take a look at the Wall Street analyst rating, it's a little bit higher at 3.92 out of 5, which is a total of 26 analysts with 11 strong buys, 4 buys, 10 holds, and 1 strong sell. Again, guys, this is not updated to the recent news, so this is probably going to change in a week or two. And this is the average forecast, or the price forecast is going to be a low of 124, an average of 172, and a high of 204. And if we really quickly take a look at the intrinsic value, we are currently at a base case overvalued at 2%, meaning the stock is about $153. The worst case scenario, we have an overvaluation of 36%, meaning the stock can be worth $99. And in the best case scenario, we're still undervalued by 37%, meaning the stock has a potential of $246. Now, keep in mind, guys, I don't do these metrics because I had a comment on my previous videos that it was ridiculous to look at stock just on EPS. And I know there's a whole bunch of metrics, but this is a calculation made by brilliant minds and investors to calculate or have an idea of what a stock could be worth. Of course, it's going to change by sectors, or of course, it's going to change if it's a growth company, but this is just so you can have a general knowledge or a general idea of what a stock could be worth. It doesn't mean it's set in stone. This is just something that can guide you to make smart decisions in your investment. Now, the last company we're going to be taking a look at, and keep in mind, guys, these are companies that do some sort of business with Venezuela and their oil, or their oil in general, whether it's exporting or importing or buying from them or selling from them, whatever it is. These 3 companies are probably going to have a lot of volatility in the stock market due to the news. So this one is also up 1.55% today in pre-market. It has a market cap of just 50 billion, a PE ratio of 34, and a dividend yield of 2.73%. Now, taking a look at the intrinsic value and the line, again, this is just the comparison. This is not going to be the actual intrinsic value like we saw in the last 2. Here's the line. The stock has been undervalued the whole time. So with this news, is it finally time for it to go upwards of the intrinsic value? I don't know. We're gonna have to wait and find out. Now, again, the fundamental analysis comparing EPS to price. I mean, what is this? Look at this jump in price. Look at what the EPS was here and look where price is at, and then look at what the EPS is now and look what price is at here. Doesn't make any sense to me, but again, different metrics, different things to look at. This is just an example. And if we take a look at the financials of this company, I mean, the numbers are bad. Okay, the numbers are really bad, guys. Keep in mind, this is just my personal opinion. This is not financial advice. So investing just because of the news that Trump took out Venezuela leader and then that American companies are going to invest in Venezuelan oil, yes, I guess it's a positive thing for the oil industry, or maybe it's not. I don't know. I'm not that well informed, but that's just an investment thesis, I guess you could say. It's not really nothing that's going to be very profitable, I guess, in the short term. So if this is going to happen, it's probably going to be for the long term. So please keep that in mind. I mean, the revenue is down 10%. Just after seeing this is, out of the 3 companies, this is my least favorite one. I want you guys to let me know in the comments below, out of these 3 companies, what was your favorite and why. Now, it has just a free cash flow margin of 3%. And if we take a look at the rest of the company efficiency, I mean, 3% gross margin, 1% number. This company, this is not something I invest in. Again, this is my own personal opinion, but I wouldn't even entertain a company like this. It just doesn't make any sense to me. The risk is a lot higher than the reward. But let's see what's good about this company. Pays a dividend. Okay, wow, what are you going to make 2% on the dividend? Might as well go with a company like Chevron or Exxon Mobil. That's a little bit safer, and the dividend is going to be higher regardless. So this for me, I don't know. If you guys have a good investment thesis for this and why it would be a good investment, I would love to hear in the comments as well. Now, with that said, this has a better rating than Exxon. It's at 3.90 with 20 total analysts at 7 strong buys, 4 buys, and 9 holds. And if we could take a look at the price targets, it's going to be a low of 144, an average of 184, and a high of 220. And again, the dividend a payout ratio of 59, which is not terrible. 3 years dividend growth and 5-year growth rate of 2.89. So everything that you guys have been waiting for, this is going to be the intrinsic value for Valero, which funny enough, the company with the worst numbers has a base case, a positive base case scenario for the intrinsic value. at an undervaluation of 197. The worst case scenario for this company is overvalued at 35%, meaning the stock could be worth 106. And the best case scenario for this company has an undervaluation of 62%, meaning the stock can be worth $432. And there you go, guys. That's why I said it before. The intrinsic value just doesn't matter. You have to look at the metrics. For some reason, the metrics in this company are terrible, but the intrinsic value is great, and it's going to be vice versa for the other two. So again, let me know in the comments below which was your favorite, and if you think this recent news is going to change anything. If you enjoyed the video, please consider leaving a like. Don't forget to subscribe, and happy New Year's, people. Thank you so much for the support. I'll see you in the next one.